Welcome to Module 2.3. In this module, we're going to take a look at price quotes in Forex and spreads in Forex. How spreads are used as a form of commission in Forex. Okay, let's get started. Forex quotes and spreads. Just like stocks, there is a buy price quote and a sell price quote, and they're actively changing during the market session. The buy price quote is how much we have to pay in quote currency to buy one base currency. As we know from the lesson earlier, the quote currency is the second currency in the currency pair, and the base currency is the first currency in the currency pair. For example, if we are trading the Euro US, how much we have to pay in US dollar to buy 1 euro. Same way, the sell price quote is how much we will receive in US dollar if we are selling 1 euro. So this is an example of how a price quote will be displayed in an MT4. This is a bigger screen. This is a quote screen. This will also be displayed on the chart as well. And the spread is the difference between the buy price and the sell price. Spread is usually the only form of fee charged by your Forex broker. There's also swap, but I don't consider swap a fee. We will take a look at swap later in the module. Okay, let's take a look at an example of a spread here. We have the Euro US with an ask price of 1.2511 and a bid price of 1.2510. So in order to find the spread in decimal, that is the ask price minus the bid price, which is 0.0001. We know from the lesson earlier that 0.0001 is 1 pip. And we also know in order to get the value of a pip, it is a lot size times pip in decimal. So one lot size is 100,000 euros times the 1 pip spread in decimal we have here is equal to $10 US for a standard lot. Similarly, you can calculate it for the mini lot and the micro lot. For the mini lot, it would be $1, and for the micro lot, it would be 10 cents. If you're confused about how I did this calculation, please watch the videos on understanding pip and understanding lots. Variable versus fixed spreads. Brokers offer fixed or variable spread as their fee structure. Fixed structure means that the spreads will remain the same pip value despite the market hours or during high volatility news events. So the differences between the bid and the ask price will remain the same if you choose fixed pricing when you open up your account. Variable spread means spreads will fluctuate higher during less active hours and high volatility news events, like the payroll events or any other high volatility news events. Spreads are tight during active market session, like the London session or the New York session. So the spreads will change. So sometime it may be a 3 pip different, sometime it may be a 1 pip different, sometime it might be a 0.5 pip different. So overall, I find it choosing the variable spread is a better option because we trade Forex most often in the London session or the New York session. And during that time, spreads are tied together. We have the MT4 application. I'm on the Euro US chart here, Euro US. And this is our quote. This is a sell quote and this is a buy quote. If I am buying, this is how much in US dollar I need to pay for 1 euro. So you guys could see there's also the price quote over here on the chart itself. There's a line going through, so to identify the price quote right there. One more thing I want to point out is the last number there. That number is the 5th decimal place. We said the 4th decimal place is a single pip, and the 5th decimal place is like a 1/10 of a pip. So if there's a 2 there, that's 2/10 of a pip. for one standard lot, if one standard lot is $10, the 2 means it's $2. Okay, I'm going to place a buy order here. Click on buy, and I will buy it. It's about 1.2 pip difference. So as soon as I place the order, my trade is negative $12. So if I sell this order right now and close the order, I would be losing about $12, which is considered the commission for a broker, the spreads. That's why the fifth decimal place is there as well. It's more of a competition between the brokers where there's a minute difference in the spreads. So that's how they advertise it and attract more traders to their broker platform. Otherwise, the fifth decimal place really does not matter except it comes to spread. Okay guys, that's the end of module 2.3. We will take a look at Forex leverage next.